Hello my dear students, hope all of you have written the exam very well. Now let us review the advanced accounting paper. First MCQs part. So this is the paper I am reviewing, sir. This is the code of the paper. Now part 1 MCQs, first case scenario 1, sir. Case scenario 1 they have given from buyback, sir. Even in my list of important topics I told you this is very important. Resource test, shares outstanding test, debt equity ratio test. So in this, what will be the equity share capital after buyback? The answer is 39 lakhs. Actually, see here, you need to apply 3 tests first. Resource test 14,500, shares outstanding test 11,250, debt equity ratio test 6,000 equity shares. So the first question is, what will be the equity share capital after buyback? Existing 45 minus 6 lakhs because of the buyback. So it will be 39 lakhs. Okay. Next. What is the maximum number of equity shares that can be bought back if the loan fund is 350 lakhs? See, if the loan fund is 350 lakhs, the buyback is nil because the existing equity is 174. The equity to be maintained is 175. So buyback is not permitted as per a debt equity ratio test. What is the maximum permissible number of equity shares that can be bought back if the loan fund is 300 lakhs? See, if the loan fund is 300 lakhs, then it will be 6,000 shares. See, here we need to frame two equations. So 300 lakhs is the existing debt, 150 we need to maintain, and 174 is the present equity. So how much maximum I can use for buyback? So by using simultaneous equation method, we need to work it out this. And we got 6,000 lakhs. And what will be the maximum number of shares that can be bought back as per Companies Act according to the decisions made on the basis of two questions, that is 6,000 shares. Now the fifth question, sir, they have tested from financial statements of company where any company has given a dividend from the past profits. So, you know, there are certain conditions to be satisfied. Here they have testing one condition, that is the maximum amount we can withdraw cannot exceed 1/10 of the paid up capital plus free reserves. So here the answer is 1/10 of the paid up capital plus free reserves. Next case scenario 2, they are testing from accounting standard 17 reportable segment concept. So I told you clearly, even in my 3/4 strategy also clearly mentioned that from AS 17 you need to cover reportable segment. Here segment asset, segment result, segment revenue, overall test, like this there are certain tests. So which would be the reportable segment on the basis of overall test? So on the basis of overall test, it is PQT. Overall test is 75% of the external revenue must be covered by the identifiable reportable segment. If not, we need to add some more segments. Now here, as per segment asset criteria, as per segment revenue test, PQT is the reportable segments. As per profitability test, it will be PQT. It will be as per the asset test, it will be PQ. Okay. You know how to find out the reportable segment as per the segment result criteria. First, add down all the segments having profits. So 22 plus 4 plus 3 plus 20 plus 1, it will be 50, or losses. 4, whichever is higher in absolute numbers, 50 on the 10%, 5. So any segment having 5 or more in absolute numbers, that will be reportable. So it will be P, Q as well as T. Okay. So very simple segment asset criteria. Next case scenario 3, sir. It's a combination of accounting standard 12 and 16. See, in this question, what are the first, as per AS 26 intangible asset, what is the correct treatment for 18 lakhs spent on publicity and research expenses? See, in this question, sir, this company has spent 18 lakhs for publicity and research of a new product. If you read AS 26, they said any advertisement cost cannot be capitalized as intangible asset. So immediately this 18 lakhs will be charged to P&L account. Next, what is the amount of net borrowing cost to be capitalized? Net borrowing cost to be capitalized is actually total borrowing cost is 5,50,000, which is the bank loan we have taken, right? 50 lakhs. And out of this, which is the qualifying assets, sir? Construction of factory building, purchase of machinery, advance for purchase of loading vehicles, and working capital are not qualifying asset. Therefore, out of 5,50,000, proportionate amount which we spent on the construction of the factory building, in proportion to that, 3,30,000 only will be capitalized. Here the assumption is that construction of the factory building is the qualifying asset. In March 2025, what will be the amount of deferred grant debited when the grant received 30 lakhs is refunded? Actually, see, we have received a government grant of 150 lakhs when in the year 2022. And Out of this government grant, 30 lakhs is used for purchase of machinery, which is refunded in March 2025. So that means, see here, 22, 23, 23, 24, 24, 25. 3 years are already over. You know, when the grant received, it is used for depreciable fixed asset and it is transferred to deferred government grant. What we need to do, this deferred government grant will be transferred to P&L account in proportion to the depreciation. Here the life of the asset is 4 years. 30 lakhs is what we have used. So every year 7.5 lakhs is transferred to P&L account. So therefore, by the time when you are refunding, how much amount is still remaining, sir? So 20 out of 30, 22.5 already transferred. So 7.5 lakhs is remaining. So that is what we need to debit it to deferred government grant. Deferred government grant account debit to bank account. Next 13th question. The following options have been suggested by the accountant of XYZ relating to the subsidy received in the nature of promoter's contribution. See, when the subsidy received is in the nature of promoter's contribution, sir, what we need to do, we have to treat it as a capital reserve and we cannot use it for distribution of dividend. I think the answer is 2 and 3 combination. So C is the correct answer. 14th question they have given from accounting standard 15. I told you in AS 15, planned assets concepts, especially actual return, expected return. They have tested actual return. Very simple. See, they have given one planned asset. How the answer is 3,25,000. How we got this? See, first to take the closing fair value of the asset 14,25,000 minus opening fair value 10 lakhs minus employer contribution, add benefits paid to the employee. So it will be 3,25,000. And the last question they have tested from accounting standard 10. So which is already same type of question is available from the study material also. So you need to determine what will be the cost of the asset as per accounting standard 10 actually. So cost of the plant 45 you take. Dismantling cost also we need to add, sir, here. Dismantling cost we need to add this one. So initial operating losses we should not consider. Interest paid on deferred credit we should not take. Initial delivery cost we need to add. Site preparation cost we need to add. So this is also consultancy fees also we need to add. So it will be 61,85,000. So this is the MCQ part. So my review of the MCQ part is, it is not easy, it is not difficult, it is somewhat average. You need to apply yourselves. But the thing is that the important areas, whatever I told you, if you have prepared them very well, I think this will be very, very easy for you. Now coming to the descriptive part, sir. See, first part 2, accounting standard 22, same type of question is available, nothing great. Depreciation topic you need to see here. Calculate the current tax, deferred tax, assets and liabilities, tax expenses. And next accounting standard 2, inventory valuation, same type of question I have given in my most expected questions you need to solve. Also I have given this type of question. Here finished goods valuation is very, very important. On one question they have tested from AS 9. And financial statements of company, I'm repeatedly telling students. So format is very, very important as per schedule 3. Now this time you see they have asked a question. So for 14 marks, this question they have tested so many. See this, money received against share warrant, deferred tax liabilities, so other long-term loans, and even your investment in debentures, goods in transit, calls in arrears, cash in hand, balance with banks, authorized capital, shares allotted other than cash, debentures issue, and that is other current liabilities, hypothecation of plant and machinery, short-term borrowings breakup, trade receivables more than 6 months, the bills. So many actually good points they have given here. Inventory includes loose tools, we need to separate them, of course, which they do not satisfy the PP definition, so therefore we need to keep them as inventory only. Claims against the company not acknowledged as debt, it's a contingent liability. Okay, see, if you see my expected questions I have given, there are 2 or 3 questions mixed, they have given one question, sir. Okay, next 3A from accounting standard 3, cash flow from operating activities, indirect method, simple question they have given. And see, AS 28, impairment loss. If you remember, sir, the list of important topics also I told you, AS 2028, no need to go in depth. I told you just see the basics, solve initial questions, sir. Initial 4 or 5 questions are there. Even if you solve those 4 or 5 questions, na, sir, you will get very good marks here. Just basics of impairment they have asked. Next, fourth question relating to amalgamation. Same type of questions is there in the study material, and I have given in list of important questions also. In one question is there, goodwill valuation is there in that question. That question I have given in the list. Same question they have tested. Next, consolidation, also very easy question only they have asked, sir. Nothing great. Consolidated balance sheet they have asked. Simple 1 or 2 adjustments. AS5 question. Internal reconstruction they have tested. Branch accounts as usually, very simple debtors method in the books of head office. So overall, the descriptive part is also lengthy, time consuming, but it's an average paper. Those who have applied themselves and prepared, so very good. I think this paper they can score very good marks. And very happy, most of the MCQs as well as the questions are came from the list of important topics I have suggested. If I mean, you can go and you can check also the important questions I suggested. Most of those students who practiced that, I think it will be very easy for them. And one more thing, sir, this MCQs part I suggested, I mean, I solved in quick span of time. So there may be errors possible, sir. Okay. Please, it's a kind of a disclaimer, please note it. And see, my intention is to give answers to the students, give a review to the students. I don't want to hurt the feelings of any student. If any students feel they don't want to watch, they can avoid this. So please don't give messages below the video that, so why you are doing this, don't give answers now. See, please don't waste your time. See, if your intention is don't watch now, please don't watch. Who stops you? I mean, there is a chance that you might get tempted to watch it, but have a self-control. Please don't watch it. Our intention is to, give quick review about the paper for the students who are going to write the next attempt, or those students who want to check, they can check also. But our intention is not to hurt any student. So that's a disclaimer, sir. Please. Okay. Thank you, sir.